Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, March 23rd through Friday, March 27th, 2009. Well, an unreal Wall Street week this week, wild in every sort of way, as we saw a rally for the first half of the week and then a sell-off for the last couple days. Now, what happened this week? Because we had options expiration. We talked about that in last week's video. We also talked about many other things, including a major trend line we had been following for a good portion of the week. And we said in last week's video that once this line broke, that would be the short play of the week. Sure enough, that line broke. And you can go back to last week's video or any intraday videos during the week that we put out, and you will find that information all last week and even last weekend. Now, you can see on this chart I'm showing you, this is the intraday SPY chart, 10-minute. And what you're seeing before you is the key trend line in a thick pink line here that we had called from last weekend all the way through early in the week for a breakdown possible once this line got taken out. And you can see the results. And this was a great call from last weekend all the way through halfway or 3/4 of the week until it really broke below that. And you can see the type of fall that happened once we broke. Now, this week, as I mentioned, was options expiration, which was a wild week, folks. I mean, we saw rallies, squeezes, major whips. We saw it all this week, ultimately climaxing on Wednesday at 2:15 p.m. when the Federal Reserve came out and gave their policy statement. And their statement basically said, guess what, we're throwing another $1 trillion into this market, basically buying up toxic assets and so forth and treasuries and blah blah, But the whole point of the being was that the dollar got crushed on that. Gold rallied. Even oil continued to rally on that news as the dollar got crushed. And remember, generally when the dollar drops, oil and all commodities will get a bid. And we did see stocks like U.S. Steel and other commodity players out there get a bid midway through the week, even though they did sell off on Friday. Okay, so let's talk a little bit about what went on this week in addition. We saw for the most part of the week, we saw a positive week, folks. It was a positive week. The Dow closed on Friday lower, as well as the NASDAQ and the S&P, but the first 3 days of the week, the market had a beautiful rally in it, and it didn't get eclipsed by the end of the week. We're going to go over the intraday 10-minute today, then we're going to go over the 60-minute. I want to show you the trend line analysis used. I want to show you the price pattern and timing we use. There's a little bit of an MA pattern in this chart. You can see, I don't know if you can catch it, but you can see a little bit of an M double top pattern right here with a beautiful double top up there, and then ultimately a beautiful sell-off here, or you could even take it all the way down here and then the A here in the flush. Doesn't really matter, but the point is, on the high end of the chart, when this M pattern shows up on the highs of charts like we have over after this week and a half rally we saw into Wednesday, Thursday, that's when you're going to get the sell-off. That's when you look for that pattern, and I can't stress that enough. For those of you that look for these patterns at the lows on charts, they generally will not work. It's the highs on the chart when their probability of 80 to 90% success rate comes through. So I can't stress that enough. This was a beautiful one because we had rallied up and we were at the highs in the last week and a half to 2 weeks of the chart. And that is absolutely key, folks. All right, so there you have that one pattern. I'll just point that out. Then we're going to get into our trend line analysis and really focus on that throughout the whole rest of the video, and show you how every key level in this market came to fruition based on these technical trendline analysis rules. All right, and I can't stress that enough. I talk about this in every video, how it's a very thinly used method. Price pattern time, people don't know this stuff. Trendline analysis, yeah, people know double bottoms and double tops, but that's about it. It's really understanding the other trend lines in the charts that are going to give you the key levels. Obviously, double tops, double bottoms are good, but it's the ones that kind of are in between, the ones that people don't know about. When no one knows about it, it works. Why do you think that, generally there are other trend lines? Why there's a lot of times you see a burst through a moving average? It's because everyone's using that moving average, and it's got to go up to a trend line above a moving average before it can reverse. Okay, so let's talk a little bit about this intraday analysis right now. All right, folks, we'll talk a little bit about this. But what I want to show you, number one, is on the trend line analysis rules. Remember, you had number one, your double top here on the market. All right, that's number one. So obviously right off the bat you have your double top here in the markets. A good gap up on that Thursday morning was a good selling indicator, which you can look at as a sell signal. Fade that gap up, especially when it's at the highs on charts, and it's going to be a good probability. In addition, Thursday, look at this pullback to the 20 moving average, and then you start to get a bearish flag pattern. In spirit of bear flag, look for another drop as it hugs the 20 moving average. In addition, notice how many times we pierced or hit the 20 all the way along, and that's really what you're looking for here, folks. I can't stress that enough, is when you hit the moving average multiple times in the course of a day, 2 days, or a week, eventually that moving average gets weaker. And I always use the analogy of a wooden door. If I run against a wooden door 1, 2, 3 times, I may not break through it, but ultimately the more I run at it, the weaker it's going to get until I break through. And the same thing works as a trend line. Here's your door. All right, you're hitting it. Boom, 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 boom. Eventually it breaks. All right, and that's the whole methodology behind what we talk about, or a large portion of it, is understanding the rules of moving averages, because too many people will try to think that this is great support up here, not recognizing an in spirit of bear flag, and then all of a sudden they say, well, why did it break down? Why did I have to take a stop out? Or why am I losing so much money on this play? And you have to understand the rules. So if I could say one thing, is join the research center at InTheMoneyStocks.com to really continue to learn this. You will broaden your horizons and become a much more versatile, profitable, elite trader or investor. Whether you guys analyze your 401ks, IRAs, it doesn't matter. Even trading accounts, day traders, it's universal. It doesn't matter. I could go to the daily chart here, tell you the same rules. I won't do it because that's for our elite subscribers, and the weekly chart as well for our elite subscribers. But for the most part, it all matches up, and that's what you got to know. All right. So again, folks, let's talk about our key trend lines and our moving averages here, and I'm going to just talk a little bit about how to find them and show you why they're so important in this video. Number one, let's start here with this low. So Thursday, let's talk about Friday's lows. How do we know these points on the chart are so key? Friday's lows. Take Thursday's low of the day, which is a double bottom, and extend it. Okay? All right, right away you have to take your lows and your highs from charts. If we had gapped up, I would have been keeping this line in, and I would have put in this pivot line. All right, and I would have put in this pivot line. All these pivot lines would have stretched into Friday. Now we gap down, so you want to look at the downside. So first of all, we take the lower pivot. What happens, we gap literally right to that point. As soon as you start to sell and you get below, that's telling you this market's going to go, because this was support yesterday on Thursday, I should say on Thursday, but as soon as you get below it on Friday, and again, look at the next candle, you try to pierce it and get back above, you fail. Try it again, you fail. When you fail multiple times getting back or recapturing a support, it usually goes the opposite way multiple times more. So it's a bigger sell-off when you can't get above and you try, because what it's telling you is people eventually throw in the towel. Buyers are coming in, buyers are coming in. Finally, when it doesn't do it, they say, oh, I better get out of this market. They sell, sell, sell. That's added to the selling pressure of this market, and down goes the market. Okay? So then what you want to do is you really want to take your next levels, all right? And we can take really your key level here, which obviously was a major level. All right, and what you're looking for now is what comes into play. So your sell-off, your first candle of your major sell-off here, really the second candle of the day, touches that secondary line, bounces, then the second one touches that line, then you actually break below and you rally and come back down. But notice this point again comes back to key level, and this point here. And this is really where you're starting to look for the pattern for the breakdown, because as the market trades kind of sideways in a bearish pattern, you see that we're going right into the 20 moving average and this trend line over here. Double points, and I can't stress that enough as well. When you have a trend line using technical trend line analysis and a moving average at the same point, it's going to tell you there's going to be a lot more resistance there than just one line. And look at how that matches up for the major sell-off. Now this major sell-off goes, and it pretty much goes right through the 200. It pauses there slightly, and you can see it bounces through, then back up, then down, and then touches this line again. But ultimately, it breaks lower, and that tells you there's a little support there, but not enough to hold. But what you really want to do next is you want to take the secondary line and put it right through these lows. Here's your pivot down and up, so you want to take that lower line and just extend it, and all of a sudden, folks, you have this lower line. Again, this breakdown gives you that lower line, which comes right from this point. Then again, you want to take your secondary low point from down here, extend it right across, and what do you have? You have a minor pivot point right here of support, which is telling you there's support, and then when you bounce up, it's coming right into that level, and then your fall. Where do you get your last point for your double bottom? And this is the last thing I'm going to show you on this video because it's so imperative. What you really want to do here, folks, is take this secondary pivot going back to the 17th and just draw it right across. All right, and I'm going to have to extend it because I had to go back so far, but we'll do our best to extend it. Look at that. Right to the lows. This has to be taken as a major level. And look, you find support, you bounce. You find that same support again, you bounce up to the secondary resistance pivot point, and then down. In addition, I'm going to go to the 60-minute and show you this. This is how you have to match it up. You have to look at multiple time frames. All right, so again, the 200 moving average and the 50 are right here. On the intraday 10-minute, you have the major level right here. You put those together with the 60-minute chart right here of the 200, and you know you're going to have major support. So again, watch these levels, folks. Come join the Research Center. Come join the Intraday Stock Chat with live video. We'd love to have you, and we will talk to you next week. Take care.